All right. Happy weekend, folks. Let's get in here and get AMZY and Amazon done. I'm starting to like this fund. It's kind of like, well, it's not the most popular. I won't get that many views, but I really like Amazon and I'm starting to get a feel for how they're playing it. I think it's going to stay in the 60 to 70 cents, but that sort of assumes that they win all their weeklies or the majority of their weeklies. All right, let's jump in. So, since they wrote a bunch, they did not get any shares bought on Friday. So, they're still with an outstanding shares of 7,700,000. However, like on Fridays, they had one of these positions open, so they closed everything out. So the yellow is the closeout. Terrific, right? 1 cent, 1 cent, 1 cent, 1 cent. That's the best you can do. You can't let these expire worthless because they're put on in the flex market and you have to coordinate a an electronic bid to close it out. So 1 cent is really the best you can do. So good job, fund managers. I mean, they didn't panic. They didn't do anything else. I mean, they were down trading down toward 194 where the close was and pretty flat from the day before. And these strike prices were up there. So they simply just executed and did what they're supposed to do. So good job. So that meant they collected, 99% of that, close to $1 million. So these are simple little, 1 penny on 7,900. So they spent 8,000, right? But they still netted 925,000. So out of the 14,420, only cost them $140. 16,200 cost them $150, right? So on and on and on. Depends on what they sold it for. They made more money, but it was a nice win when you collect 99.9% of what you got paid. That's a win in my mind, right? With the fund moving down, that's why flat to neutral is okay. And when it's running, you want it to run, 5, 7%, whatever you're writing those weeklies out of the money. Because if it runs too fast, you get capped, and we all know that story. Okay, so what did they write? Well, based on this 194, the earnings are not till August. So, they put on, this one had already been written. So they put on 4,000 new ones, 4,115 new ones, and 290 new ones, right? So they chose a pair of 197s, which constituted 4,290, but I have to show it with separate line items because they got different prices. And I like that and I understand that. And the fact that they laddered a little bit and did a 197 and a 200, I like that also. So kudos to the fund managers. Great job. So how does that look for cash? Well, it looks good, right? Let's go out on the weeklies and take a look at it again. You'll see these rolled in to a summary because we don't care over there what the individual price was. We just want to know that we have this many at this strike price, right? And how far out of the money are they? Cash didn't show us a lot. The reason it didn't show us a lot is because there were no buys into the fund. We're just collecting a little bit of weekly interest on those money market and treasury yields. So no worries on that. So let's take a look at the weekly. Again, see, that's why this is it's almost like it's a different number because over there I'm showing 4,000 and 290 a separate transaction only because they collected different monies. Over here, it's saying, hey, I got 4,290 at this strike price. How far out of the money is it from where we currently are? So probably in an AMZ with the underlying of Amazon, which is what these are written on, that's probably fair, right? 283 and 155. It's a little close, but I actually think next week could be down. But again, don't take that with a grain of salt. It's just my guess that we're slightly down in general equities next week. Anything could be different. Gold could go up, Bitcoin could go up, the dollar could go up. My gut just says equities aren't going to do much, but again, it's a guess, guys. An educated guess, but nonetheless a guess. So where do we stand with the new ones? Well, with the new ones, we got a little bit of equity, 3.8%, right? And now I'm going to take you over to holdings and run you through that in more detail. And you see both of these were down on the day, and they both performed about the same, right? Because we weren't capped, we were collecting all the income. Let's look at that again. So I have to go to the first one. Sorry, I got to scroll over. Yeah, we actually didn't go down as much as they went down. So that's a win when you're measuring it, which is what it should be when you're not capped and you're just collecting all the money. So they went down 2.65 and we went down 2.17. So understand that. Let's jump over to holdings and we'll cover that. So here's our cash. I'm not even sure I updated it, but what I do make sure I update. I didn't, but I'll update it by the time I do the next one. What's important is that I have the appropriate numbers over here for the assets and the shares outstanding. And then I'm going to show you the synthetic. So what that describes is this is the actual close. Obviously, I wrote it. And this is the projected value when you divide the outstanding, not projected, it is the NAV value when you divide the outstanding shares by the net asset values. Okay. In the synthetic, by going down a little bit, obviously we got a little bit larger. We went from 3.1 to almost 3.8. So let's look at that for a minute. Here's our 3.78, call it 3.8 paper loss. Okay, and again, how far is that out? Well, that's out quite a ways, right? That's out to 8.16. I didn't update this one because I didn't put any entries over here, but there you go, right? We're not far at all away from that. Okay, so let's continue on the holding. So we had a 3.7, a 3.1, only a 4.48, and another 4.48. So something I must have copied that twice. But the point being, I think we changed also our synthetic, but needless to say, it's no big deal with an 8/16 date. So here's what I need to cover. So you know what happened on the weeklies. We collected 99.9% of those guys. And I'm going to go back and actually show you that one more time, just so you see it, right? So here's all the penny. And then I touched on this, but then you see the numbers, right? I always make them yellow or some different color. And then I put the new ones over here. So now in holdings, I want you to see the new ones, right? So in this one, we've made money on both of them, but just a tiny bit of money. And these are averaged across two different sales, and so are these. So you can see that on one of them, we're up 4.47%. And on the other one, we're up 3.42, much worse than being down. I'll give that. No, we've got 5 trading days to go. And let's look at our payouts, guys. I don't need to make this any longer. So what I looked at is we're now at 27 cents of total revenue, and 99% of it's coming from the short call, right? So that stays the same if we don't run by 197.50. And if we run by 197.50, we're going to lose a portion of this, at least half. And then if we go to past 200, we're going to lose it all. So in a way, we don't want that to happen, even though we're going to make money on our synthetic, right? But I mean, you can't win if you're not winning kind of on both, right? You want a subtle rise in the underlying so that you get your synthetic rises, but not above what the margin or the amount of distance they wrote in the strike prices. So, and then I kind of do the math and say, okay, the last payout I think was 76 cents. So we've got 3 more opportunities to write weeklies. So assuming we get around $1 million each right. That gets us up to 5 million. That's assuming we win them all. And 5/7 gets us up in that high 60s, 70 cents where we were. So that's kind of the best we can do without going up in the synthetic. Okay, so that's just paint you that picture. I'm new to the fund, but I quickly make that assessment. And I think as long as they execute and this thing stays within a fairly good range, now earnings will change that, but earnings out into August, so it may be after the 8th of when we declare. I'll have to go and put that in. Typically, I put that here somewhere about impending, and I'll get that updated for you guys. Okay, so that's what I got for you. AMZY's cruising along with Amazon doing the same. Okay, guys, that's what I got for you. Again, this is not financial advice. I'm not a financial advisor. It's for fun and entertainment. See you. Bye for now.